I'll just say, welcome to Morag again and thanks for time for running this session this afternoon. We're really pleased that through the programme itself, we can also be championing and supporting women on the programme to show off their wares and talents and share the benefit of their expertise. So over to you, Morag, and I look forward to this.
Okay. Okay, well, I won't introduce myself because Nicola's basically done it for me. So I was going to do a little bit of a blurb. But yeah, okay. So basically what I've been asked to do is, as it says here, just talk a little bit about basic finances for your business. Now, I have been told that potentially there are different, we're all at different stages with things like setting up the business. Some of us haven't even set them up yet. Some of us have got started, but are not necessarily at the stage of even thinking about accounts because we're still raising money, whatever. So I'm kind of hoping that it's not going to send anybody to complete sleep, and that it will actually be of some kind of use either now or in the future. That's the theory. Okay, here we go. Okay, so what I was thinking was the things to consider in your first few years, as far as the accountancy side is concerned, more than anything, obviously. One of the things that I have found is that some people seem to think that revenue is the same as profit. Obviously, to me, that isn't the case. Revenue is actually the money that you're physically making, and the profit is after you've taken all your costs off. It's a little bit, I kind of equate it a little bit to, I know that there's some people that have a bank account that they think if they've got any checks left in the checkbook, they've got money left. So I kind of think, I kind of equate it to that. But I know that there are some people that just think if you've got revenue, you've got profit. And as most of us, I hope, know, you're obviously got to take your costs into consideration before you make your profit. Okay, I know there's lots of things that are pulling us in all directions, but finances, when you're in an organization that is looking to get some kind of funding from other places, finances are actually quite high on the priority list, because you've got to be able to kind of prove to them the figures as well as the value and also the case study for what you're wanting to put together. So it's about, in the early stages, obviously that's about trying to do as much research as possible as to what you think your costs are going to be, and making an estimate on what kind of income you're hoping to get that would cover that, as well as all of the other bits that you need to do for your case study, your marketing, etc. Okay, we've already talked about consider legal structure. That was mentioned before. There's a number of different legal structures you can obviously go into: sole trader, limited companies, private companies, etc. But as Nicola said, we've already had a session on legal structures, so I won't go into too many details with it. Again, taking time to build your business plan. Now, I've been quite bad at this part of it, actually. I'm kind of doing it as I go along, which is probably not the way to do it. But again, it is one of those things that I had a business plan in my head. I knew kind of what I wanted to do and I knew where I wanted to go, but I hadn't really filled it out. And then lastly, all of these different types of account here are very important as you get going, and you're definitely in your first few years, to keep an eye on. Cash in bank, I think that's a no-brainer, because obviously you kind of need to know that what's coming out of your bank is actually what should be coming out of the bank. So you need to be doing regular reconciliations with the bank statements. That helps you know what kind of cash flow you've got. I mean, I'm going to go on and show you budgets and cash flows, but basically it shows you what kind of money you've got. If you're looking at the cash flow, hopefully you try and guesstimate what kind of monies you're going to have in the future and what monies you're going to need depending on what you want to do. Accounts receivable. That's your customers. Make sure that you get your invoices out and make sure that you chase them up, because there's a lot of people, once they've sent them out, they kind of forget that they actually need to get the money in as well. And not everybody is great at paying. So, you know, you need the money more, possibly as much as they do, but, you know, you've given a service, you've given a product, make sure you get your money for it. Inventory, that's not going to relate to all of you, obviously. That's more if you're building some kind of product, creating a product or whatever. But again, it's keeping a record of what kind of inventory you've got, what your costs, what you've spent out on it, as well as balancing it with the stocks that you know that are in your storage cupboard or wherever you're keeping them, and that hopefully your accounts and what your storage cupboard says as far as counts wise, numbers of products wise, agrees. Some of us will have loans. Obviously it's important to make sure that you're paying those on a regular basis so that you're not defaulting and getting a bad credit rating. It's also important for you to keep a record of where you are with having paid that, etc. Your sales, obviously that's where, well, I mean, I guess it seems obvious. I'm not sure that I'm being obvious, but I'd rather be kind of bottom base, everybody knows what I'm talking about, than miss something. So basically, everybody has some kind of sales service. I'm calling it a sales, but you've got money coming in, you've got your grants, you've got all of that kind of thing. All of those kind of things need to be kept an eye on to make sure that, sorry, I got a, so it would be your sales and your income accounts are tracking the monies that you are getting in, how well you're doing as far as reaching your goals, because hopefully when you've done your budgets, you're going to be comparing the figures to your sales, your actual purchases, payroll expenses, etc. So that these are all ones that are quite important to keep thinking about and monitoring on a regular basis. Okay, so what I want to go on to now is actually a budget. Now, here I'm talking about potentially a startup budget, potentially a new project budget, something like that, somewhere where we're kind of more starting from scratch. Now, as it says there, a budget's only an estimate of your income and expenditure for a set period of time and for potentially a set project. Now, if it's an established business and if it's just your normal next year's budget and nothing has changed or very little's changed, it's not like you've got a new project, you've got anything new coming in. A lot of what happens is we would normally use the organization's last year's figures, and then we'd have a look at to see what's changed, what's new that we're adding in, what kind of extra bits are we moving in, do we have to add interest, have the prices gone up? And it's all about taking your last year's figures and kind of just adjusting it for any new things that have changed in any kind of situations that have changed in the environment or whatever that you're working in. However, when you're starting out, or as I said, or creating a new project, you've really got none of that history to work from. So what your budget has to be based on is best guess stroke research. So obviously, if you're at the moment, if you're wanting to set up a business and you know that you're potentially wanting room hire or etc., you'll already have gone out and looked to see what's there, how much is it going to cost. If you're making a product, you'll have gone out to find out how much your materials, etc. You'll have an idea of a lot of the costs that you're already talking about. And what we need to do, what tends to happen with a new project, new budget, is you work out the costs first, and then you look at the income to see how much income on how you're going to actually cover those costs. Okay, so No, it's okay. Right. So I'm quite happy if you need it, I can quite happily send you out a budget. It's awfully small. I don't know how I can make that any bigger. It seems awfully
Don't
small.
worry, we can see that fairly well. I know what you mean. We've got the gist. You've got your income line, your expenses, and then you're like an annual picture there, haven't you?
Okay, so long as you can read it, that's the important bit. So I'm quite happy to give you a budget template. If anybody wants that, that's available. But so when we start with a budget, or when I start with a budget, what I would do is I would be looking at what I call fixed costs. Now, oh, well, everybody calls fixed costs, but so a fixed cost is something that's not going to change. It's not going to increase or decrease depending on the kind of income or number of products or whatever. It's independent of what you specifically do as a business activity. Okay? So what I want you to do is maybe just write down a few fixed costs that you think you would have in your budget. Just a few. I just want an idea from you so that you kind of get an idea as to what you know, if what people understand. I'll just give you a minute. Oh, a few seconds. Okay. Anybody want to kind of throw out what they think might be a fixed cost? I mean, I'm going to give you the examples in a minute, but go on, Alice.
I'm assuming initially, anyway, rent.
Yep.
Right?
Rent is definitely one, because you would have to pay it out whether you sell anything. Basically, if you are renting an office, a building, whatever, rent, yeah, definitely.
And even if you're running a project and you're renting a room for
that project,
if you only get 3 people turn up, you've still got to pay the full rent.
Yeah, we can't apportion it dependent on the number of people that have come or anything. So that's basically, yeah. Anybody else want to throw something out, or will I just?
I mean, there's the cost of materials as well, I suppose.
No, that's not a fixed cost.
Can go up and down, can't it, depending?
Because that will depend on the number of products. So it's more the next level, which is variable. It is a cost, definitely it's a cost, but it's not a fixed cost. Okay, I'm just going to move on if everybody's happy enough with that, unless anybody's feeling desperately to jump in. Okay, all I've done here is I've just put a few that I thought of. So basically, anybody that's on a monthly salary, rent, rates, insurance, utilities, interest, telephone, stationery, subscriptions. I mean, the list goes on and on and on. But it's basically, it's looking at the fact that these are things that you cannot change unless you literally get rid of them entirely. It's not under your control at all. It's not dependent on the number of things or services or products or people or clients or whatever. It's not dependent on that. These are your fixed costs. Okay? So hopefully everybody's now, can people react just to say that they understand what I'm talking about? There's a wee react thing. Is there a wee react thing?
You might not be able to see it on your screen, Morag, but yeah, I'm reacting. People are reacting. It's making sense.
Okay. I just want to make sure that I'm not talking absolute gobbledygook and nobody understands. And also the accent, you know, it might get you a little bit. So if you need me to repeat something, come on mute. I'm quite happy, and just tell me. Okay. So we're talking about your fixed expenses. That is the first thing you need to cover, regardless. Next, we've got what's called variable costs. Variable cost that varies with the level of your output. So that depends on your number of products, potentially the number of clients, potentially
seasonal,
all sorts. Seasonal, yeah, I get, because it's still variable with the season. It's not, that's not quite,
not a key one.
again, it kind of thinks it's a fixed for those periods, potentially. It depends on what it is, really. But again, if anybody, I mean, we've already had one mentioned about materials. Anybody got any other ideas that they want to share, or are they?
Travel? Would travel be a variable?
That depends on your business.
Yeah.
It could be a fixed cost or a variable.
Mm-hmm.
I mean, basically, if you're going to recharge that to your client, and it's obviously you're recharging the specific hours, the specific miles, then it's a variable. If it's something that the business just has to absorb, then it's a fixed.
Mm.
Okay.
But if you need to buy in service, so like maintenance, or if you need to buy, like you only pay staff on sessional rates or things like that.
Yeah, so you got, that's right. So direct labour, anybody that's actually working specifically on the project and is kind of part of the core cost of each product. So like a direct wage, if you're specifically working on those products, that is a variable cost. Normally I call those wages just to distinguish them from salaries. Salaries are usually a fixed monthly regardless. Wages, I'm talking about, you know, it can be varied by the number of hours depending on how many hours you have to do to get the products, etc. So yes, it is a variable cost. Okay.
Mm-hmm.
Now, the other one that I've, come back. I got a bit fidgety there. So yeah, the three main ones that I automatically thought in my head were direct materials. So that's all your raw materials to kind of make up your products, etc. Direct labor, but also packaging. Your packaging materials, because that again will depend on how many you're sending out, etc. Potentially your postage, you know, your kind of delivery postage costs could be a variable cost in that case. But postage just for your normal day admin, buying stamps, etc., it can also be a fixed. Only you can decide, because it's usually things that you're going to include as kind of something to decide even the basic costs, the basic costs that you need to cover with your sales price, never mind anything on top. Yeah?
Yeah.
Okay. So what I need to do now is I need to go to this. Now,
oh, that's not come up.
I've done here is, this is,
come up.
as I said, I showed you earlier, there was the template. Sorry, what, Nicola?
It has come up. It took a little while to come through. It's come up though.
Right, okay. So this, I've started filling in basically the blank template that I showed you earlier. And I've just, hang on a minute, I want to take these out for the minute. I'm jumping ahead. So basically all I've done is I've put some figures just purely out of my head, okay? And I wanted to look more specifically, and again I've noticed, I wanted to look specifically about how I would go about putting in the variable expenses, because what you're trying to work out is how the variable costs will change depending on the number of products or the frequency of the products or whatever that you're doing. Okay?
Mm-hmm.
Does that make sense?
Yeah.
Okay. So what we do here is we make, on this second tab, we make assumptions. So what I have done here is I am assuming that my direct materials, I'm talking here about being an online course. I just chose that as an example. Obviously, you need to have it more specific for yourself as we're moving forward. But I'm using as an example an online courses. And so my assumptions are that each of my courses, the kind of materials I'm going to need are like books, videos, and like paper booklets, okay? That there'll be some direct labour related to those courses, and that there'll be some packaging and postage, because we'll be putting all the books and videos together and sending them out. So that this is an assumption that I have made based on the fact that I'm talking about my online courses. And as I said, what we have to do is we have to work out, what we're trying to do first is work out how much the costs will be before we start thinking about the income. Okay, so I'm just going to put some figures in that I kind of decided on. So I decided, again, assumed that there's 30 students per course. And what I'm trying to do here is I'm trying to work out a unit price per course, okay? So that later on I can times it by the number of courses I expect in a month, and then I'll work out the income by putting my fee cost in. Is everybody up to date with me? Yeah?
I think so. I think
Alice is
it'll be
looking a
clearer
bit-
when you go through it, but yeah, makes sense.
Have I lost you?
It's
Okay, okay.
numbers always throw me.
Okay, okay. So these are assumptions. These are your best guesses, or what you, when you put the price in, you will have researched it. This will be the kind of prices that you've found it's going to potentially cost you for each of your different materials, okay? So basically, I decided that my books were going to cost me £3 each, that my videos were going to be £1.50 each, and that my paper booklets, etc., are going to be £2 each, okay? And what I decided now, I know it's less than minimum wage, but just bear with me, okay? Before anybody jumps in. I decided that I was going to be paying John £4.50 an hour, and I would be paying Joe £2.95 an hour. I know, I'm a skinflint, I'm an accountant, come on, give me a chance. Okay, and again, I was looking at the packaging, and I decided that each of my boxes will cost £1.50. The packaging inside will be about 50p, and the postage is going to be £2.65. Okay?
Mm-hmm.
So that is based on the research that I will have done, looking at competitors, just kind of whatever research you've had to do to find out those prices, which we all do, because otherwise we have to do some kind of guesstimate, best guesstimate. So that's usually based on going out and having a look, see what others are doing, having a look at, can we get the books, how much are they, etc. Right. The next assumption, as I said, I've already assumed there's 30 students per course, okay? So what I need to be then talking about is, I'm talking about for each course, I need 2 books, 1 video, and 1 paper. But because I'm looking at a price per course, I need to be timesing those by my 30 students. Now, I understand, I realise that not everybody necessarily potentially doesn't know how to use Excel. I'm putting in these formulas. If you need any help with the Excel, potentially that's something I can help you with in a separate session.
Mm-hmm.
But Excel is really good for being able to do these kind of things, because you can change the figures, you can change the figures and mess about with them to see what effect different scenarios will have to each of the things that you're doing, okay? So as I said, so it's 1 video per course, but it's also, if I can do this.
And what I would say, while Morag's doing this, if people would be interested in an additional session on some Excel training and how to put these sorts of things together, or how to start to use some of the formulas and do some cash flow sort of scenario planning, or even costing scenario planning, put that in the chat, and we can probably look to do that before, in the next couple of months.
So you want people to put their names in the
they can either
chat,
say yes,
right?
please,
No, that's
like
fine.
interested, or interested in Excel or whatever, but we'll know. Thanks.
Okay, so in total I need 60 books, 30 videos and 30 papers. Okay, now what I think I would need time-wise from each of John and Joe is 60 hours in a month and 10 hours from Joe. And as far as the packaging is concerned, again, I'm talking about one box. Hang on. It's a new keyboard, so I'm not sure where all the keys are. One box per student, one lot of packaging per student, and one lot of postage per student. Okay?
Mm-hmm.
So what I'm saying is every time I send out for a course, I'm going to be sending out 30 boxes. At the moment, I'm assuming they're full. I'd need to send out 30 boxes using 30 lots of packaging and 30 lots of postage. Okay? Hopefully that makes sense. These are all assumptions, and it'll all be, these will just happen to be what I've chosen. You know, you might have different, obviously you're going to have different because you've got different, you're not an online course, etc. Mm-hmm. So right away, I kind of know the minimum, these are the minimum units, etc. for a course. So if I only put one course, if I only did one course a month, okay. Don't do this to me. Mm-hmm. Don't do this to me. That's because I didn't put it in the right place. Look at that. That's ridiculous, Morag. Right. So if I only did one course a month, this is how much my costs would be. Well. And if I went on to my profit and loss, sorry?
I said it was to do a big reveal there. That worked well.
Yeah, and then I went when I put it in the wrong box. So basically, because I have set up this as my assumptions, if I was only to do one course, these would be my direct costs, and potentially I would make a loss of 19,375, just as if I didn't, if I at the moment I'm not even looking at the income, okay, because we know that there's no way, unless I charge £19,375 for that one course, I am not going to break even, okay? And that would be whatever that is divided by 30 per person. I'm not going to do that bit. So really what I'm doing here as well, so the next thing I would do then is I would also decide what kind of cost do I think I'm going to charge. So again, it's about, what you have to do is mess about between the number of courses and the price. Will eventually put in your income up here, adjust your variables, and what you want to come out to is at least 0 here. Okay? Now, what I have not done at the moment, or have I? Did I put it? Oh, please, just decide, are you going up or down? What I haven't done at the moment is I've actually not put the salaries back in again, because I wanted to show you it without the salaries as well first. In fact, I'll leave them, I'll still leave them out at the moment.
And Morag, this is a really good thing, because what people will often do, and granted, when you're starting up, you
can't afford a salary.
But what I mean is, people will often start something without realizing the full costs, and before they know it, they're running at a loss, or they've got into financial difficulty. And I think doing some scenarios before you even lift a finger, or before you even try and write a business plan, this is why I always say start with the numbers, because it soon helps you work out what's viable and what's not.
Yeah, I mean, obviously it's potentially possible that you've not got all of your costs there, so those might adjust as you learn it as well. But what's good about Excel is that you can mess about with all of those things and, you know, get your new scenarios. So at the moment, let's say I'm just as a guess, I'm going to say £800.07. Okay. So I'm saying, what would it do if I did 7 courses a month? Because remember, we're talking about distance learning here. So mainly I'm talking about sending my actual labour and stuff is more about packaging, telephoning, etc., etc. Okay. So let's say if I did 7 courses in a month and charged £800 for it, what would that do? So what I've done is, because I've put my fee in, my course fee in, it's now giving me my income up here. And it has adjusted my variable expenses at the bottom. So at the moment, it's actually saying I would make £23,000 if I was to do 7 courses a month at £800. Yeah. Now, obviously, you can keep adjusting those. You could change your figures to, oh, well, you know, 400. If I only wanted to do it 400, make it more, what's the word I'm looking for? More affordable. What's that going to do to my figures? Ooh, you know, and you can just start kind of messing around. Half the price, twice the course is what I've just done there, in case you wondered. Just to see how it all works with your figures, okay? So what originally, I was just going to do this originally. I'll go back to the 800. So here, I had a positive figure. I'm thinking, oh, 23,000. I wonder if I could afford to pay myself a salary. Okay. So I'm going to go in and give myself a salary. Now, what you have to remember is when you're putting in salary, you need to not only say what your gross salary is that you're giving yourself, but you might also be paying employer's national insurance, and you might also be paying an employer's pension for the stakeholders. Just think about that as you get bigger kind of thing, okay? So I'm thinking, okay, I had almost 24,000 of a profit there. Let's see, what would that mean to me? Oh, I'm down by 4,600. Okay, so if I'm still sticking at my £800, how many more courses am I going to have to do to be able to give myself a salary? So let's just try 8. Oh, 8 would actually make me break even. And it's all about, so now you've got all of your figures in there, mess about, see how they work for you, see if you can afford a salary, add your different costs, etc. in. And that is basically giving you, that's your budget, basically. Okay? So what have I said at the end of this? I can't remember.
And Morag, what I was just going to say while you're finding your next bit is that if you haven't used Excel before, Morag can show you, and we have some examples as well, and we work in this way to be able to help you put together a template that will have the right formulas to tot all of that up. And once you learn how to do that, or once you have the right templates, it's an absolute godsend to say it shortcuts your ability to plan and to predict and to test ideas through those scenarios. So it's it can be, as I said,
I'm quite happy to give you the template that I got. I'll give you that out. That's not a problem.
Fantastic.
If that's folk want, but yes. Also, you said folks should put their name in the chat if they're interested in actually having a follow-up Excel or
and
whatever.
We've had a few
course,
say yes, and I know from
said?
other sessions people have said that's of interest. So we'll talk again about trying to put something together on that.
Okay, so I mean, basically, as far as my actual budgeting side has gone, that is it. Does anybody have any questions on that kind of side at the moment before I move on to cash flows or anything? God, I'm going very quickly, aren't I?
That's all right. There's time for some questions if people have got them there, or people can give you some feedback on, you know, what they know and don't know in terms of some of this stuff. And is this new to them? Is this stuff that they're already using? So you can give us some thoughts and feedback on what you're hearing as well. Oh, how are we doing, Alice? I know you said numbers scare you. That face says it all. No, I'm kidding.
Was it bad?
No,
No, it was that was very sensible and fun. It was just it's just the idea of me having control of the money really scares me. Just in case I get it wrong, you know, like if I forget to pay somebody or forget to do something wrong with the tax or things like that.
Well, this is where sorry, I don't want to be blowing my own trumpet, but that's where you can get things like bookkeepers, accountants to help you, at least direct you in the right direction, especially as far as tax and things are concerned, for definite. If you can afford it, or if I can get funding, then as I said, I was talking about potentially offering free sessions and stuff. But so yeah, it depends. It also depends on how complicated you get. I mean, when you're basically at the start point, all you really need to do, and again, I have a template, it's basically called an extended cash book. All it is on one side you put everything that comes in, on the other side you put everything that goes out, and then it's extended because you then say, oh, that's paying postage, so you put it in the postage column. That's a grant, you put it in the grant column. It's as simple as that. And then what you do is, on a monthly, weekly basis, however confident you're feeling about it, you just make sure that everything you've put on your sheet agrees to your bank account, or that you've got the and or you've got the receipts, because the receipts are also to do with petty cash as well. It's trying to make it as simple as possible, one step at a time. Not really thinking it's numbers. It's just.
It's interesting hearing you say that, Alice. Because I was just going to say, you don't have to do it on your own, is a good point that Morag's making there. You can get expert advice, you can get help, or you can pay somebody else to do it. But also, as you evolve, most of you, once you get to the point where you're moving forward, will have a small board or a small team or a management committee or whatever it is. So you'll have somebody else kind of checking and supporting you. It might be somebody else's role to do that. If you really hate this stuff, somebody else you would bring on board to do this stuff. And also you'd have a plan, and you'll have a checklist of, these are the things I do on a weekly basis, these are the things I do on a monthly basis, these are the things I do on an annual basis. And there's ways of setting alarms or having somebody else do this so you don't have to.
But it's also, what I'm trying to say is, if you just disconnect the fact that it's to do with finances, the actual keeping of your records is just like keeping a list. But you kind of saying, okay, that number relates to postage, so put it in another column or whatever. It is about mindset partly. I think a lot of people are frightened of numbers, and it's one of the reasons that I want to be, this is kind of why I'm here trying to help, because I know that there are people that have worries, and it's like, there's a lot of accountants as well, I suppose. Potentially they want you to be scared. They want you to think it's really difficult. I mean, that when you get up to the high up stuff, yeah, there's a lot to learn, but we're not talking about you doing that. We're just talking about you keeping a record of the money that's going in and out of your business, as much as anything, as far as the finances are concerned. Anything after that, your tax, your accounts, you get an expert to do it, or you don't worry about it. Just
what motivated me over the years around all this is, I've only got a C in maths at GCSE. I'm no mathematician, but it's the patterns that the patterns and the rhythm of your business And it's the fact, you know, you can only operate sustainably, and you can only really make the most maximum impact you can make in your community if you've got financial viability. You will only sleep at night if you know you can pay yourself. So it's the kind of the money adding up, seeing, you know, what the patterns have to look like in order for it to all work, and the building blocks to make it function. And you know, there were quite creative and artistic ways of thinking about the numbers, if that's the way you are.
If it worries you,
to make it feel more
Right.
digestible and more doable.
But just take it one bite size at a time. It's when people think of the whole big, oh, this, that, the other, oh, I've got to do it all. It can get very anxious. Just do it one step at a time, one figure at a time, if that's what you have to do. Okay. Okay. Ooh, almost killing myself. Right. Okay. So what I'm going to do now is I want to move on to, if I can get it to do what it's supposed to.
And I'd say other people have got questions, pop them in the chat, and we can collectively go through any more, you know, after the next section.
I'm hoping, do you know, I'm not sure what I've closed and what I haven't.
It's all right. It's time to look.
Because originally I had it so it was opening everything, all of my computer. Okay, well we'll give this a try and see what happens. Okay. Right. Okay. Let's see. I might have to jump around a little bit. Okay. So what I'm going to go on to talk about now is the cash flow. Now the cash flow is more about come on. I know what to do. Can I get rid of this?
You just click enable editing.
Yeah. I want to do the slide.
There you go.
Okay. So why is a cash flow important? Okay. Well, you can read it here, but basically it's very much what Nicola was talking about. Budgets and cash flows, it's about trying to reduce the uncertainty of where you're going and what's happening. And for instance, when you have your budget, what you'll eventually be doing is comparing it against your actual figures on a fairly regular basis. And if things start going off from your budget, you need to have a look at it and see whether that's a good thing, because potentially you're doing better than you thought you were doing, or is there a major problem there that you have to address? So that's a good thing about having a budget. With the cash flow, again, the cash flow is more about trying to look forward as to where's your money going, when's it physically going to come out of the bank, what money am I physically going to have in my bank, what if I've only got a certain amount, but actually I know I want to bring a new project or something in, and I know I need a new amount of money. It's highlighted in your cash flow so you know to go out and look for it. Okay. So it helps you make more confident decisions because you've got something to make those decisions based on. Yeah.
Mm-hmm.
So I think I've said basically everything there. How your cash balance may look at the future months helps you focus on what receipts you need to cover the costs. That's what I was talking about. If you need something, if you've got a new cost coming in, you'll need more money. Doing it on an Excel spreadsheet helps you model it, the worst and best scenarios. So, you know, what is always worth doing is maximizing the costs. So basically making the costs the guessed costs as high as you think they might be in comparison to the lowest income you think you'll get. So that's your worst case scenario. That is your most pessimistic. It should never get worse than that. So it's definitely worth looking at that. And if you can get a balanced budget based on that, then potentially you're heaven sent, you know what I mean? Because the costs can only go down and the income can only go up from there. But it is about messing about with the figures to see where they're, try and get them as realistic as possible, but have a look at the worst case scenario as well, which you can do on cash flows and you can do on your budgets. Okay. Yeah, so what the cash flow does as well is it helps you look at those dips. So, I mean, the way that I've set up the budget and the cash flow to a large extent is a lot of it is fairly regular amounts. There are a few things that you'll see I've kind of moved and dipped and stuff. So it is about also looking at the dips. When are you going to potentially go to a negative? You can't go into a negative bank. Well, you can have an overdraft, but you need to be able to fund those dips. You need to fund the negatives. So this is what your cash flow will do for you. Yeah, hopefully that will go. Now what have I done? Why is that been sitting there? Go up there again. Go. It's too sensitive. Right, so I want to move to my live spreadsheet now, and I'm not sure it's going to do it for me. Sorry, I need to.
Don't worry.
Change again. Have I actually got it on there? Is it under here? Now this was the budget that we originally started, but I want the cash flow equivalent, which is this one. So let me move this over here. Can you see this? So this is basically the budget we just created in the other part that I was doing, with the eventual outcomes of this just made money, even though I'm paying myself 2,000. Okay. So the next lot of assumptions that you need to look at before you move on to doing your cash flow is, if we know that these are the best guess income and expenses that are going out, we need to have a think about we need to have a think about how these are going to be collected or paid. So are they going to be month by month? Are they going to be paid in advance, in arrears? So quite often what happens is you would give your potentially give your customers a number of days credit to pay their money, to pay their bills. So you make an assumption about that. So that 30 days to me is just 1 month, okay? And the same for creditors. Again, I made an assumption that my creditors are going to give me 30 days credit to pay their bills. So all that means is when I'm looking at the budget, that actual physical money will be coming out a month afterwards, because my suppliers have given me a month's credit. And if I've got income coming in, it'll not be until the next month before I get it in. That's all that is when I'm talking about my creditor and my debtor date, my supplier and my customer days. Okay. Now, the other thing that you may have to consider, and I hope we don't have to, is that, is it that you're actually going to get 100% of your money in? Or are you going to have to, is it more likely that you'll not actually get it all in, you might just get a percentage of it in? Now, I think potentially that is bigger businesses as you get bigger and have more time spent chasing to get your money in, etc., etc. You might have some bad debts. You might have people that are going bunk or whatever. So at some point there may be this collection rate. How much of it are we actually expecting to get in rather than 100%? Okay, that may be something you have to think about. Now, as I said here I've made decisions about what my kind of payment terms are. I've also said that I expect 20% of my fees to come in cash and 80% of it to be credit.
Morag, are you looking on an assumptions page here? Or are you?
This is the assumptions page.
Well, will you click on the assumptions tab in the Excel sheet? Because we're still looking at profit and loss.
I have.
If you-
That's what's up in front of me.
That's weird. It's not, for some reason, the assumptions tab's not, we're not seeing that. We're seeing your cash flow sheet. But don't worry, we're listening and it's making sense. It's just, it's easier to.
So you've not actually seen the assumptions?
Not that page for some reason. We're looking at your profit and loss tab.
You're still looking at my profit and loss by month one?
Yes.
So you haven't moved, right? So you're probably not looking at the right one then.
Yeah.
I've probably not shared the right page. Just bear with me a minute.
Okay. Normally you'd be able to just click on that. I just thought if you.
Yeah, it's when I went on first, it just said share the computer so I could mess about with anything. But for some reason, when I went back in, it didn't give me that option. I'm not sure why.
Cool. Oh, well, if you pull up that page and then share it, people will. I just could tell you were looking at something we weren't.
Right. So, can you see the assumptions page now?
Yes.
Right. So this is the assumptions page. So what I was saying was, when I start creating my cash flow, I would make these assumptions about whether or not, like, the salaries are paid monthly. I've decided the rent's going to be paid a month in advance, rates, etc. Okay?
Yeah.
It's just assumptions that I've made.
And
then I also made the assumption that 20% of it would be in cash and 80% would be on credit, which then has the 30 days lag on it. Sorry, I've got a light here that keeps going on and off. I don't know why. Does it matter? Yes, it does. Is that better?
Yeah, we can. It's fine.
Okay, so just for the fact to show you how it works, I'm going to put an 80% collection rate in there. Okay, I'm saying that, I'm only going to collect 80% of my money, which actually, if that was the case, you'd go back and change your budgets. Think about that as well, okay? I'm not going to do that because I've kind of talked through how to do it. So on the cash flow, so what I'm saying here is, why is that not doing it? So what I've done there is I've said there's my 80%, I'm getting 80% in as credit, that's where it's here. And I'm saying out of my profit and loss money that my income I'm expecting to get, yeah? And then I've assumed that there's the 80%, I'm only going to get 80% of the money in. And that should then give me these figures. Now, if I was getting 100% of the money in, okay? And this one would, hang on. Shit, sorry.
Being recorded.
And there I would have, this I would have, on here I would have my 20% of my income in cash. And it'll go a day behind, a month behind, because that's how I've set it up as far as saying that I'm giving them 30 days. What's the word? Credit. I keep forgetting that word, credit. I don't know why. It's a word that just doesn't stick in my head. Okay. So basically you would go through the same, if it's a month by month, we're basically talking the same month as it comes out here. So I would just connect it to, again, this is a little bit of an Excel thing, but hopefully you're still following it. I'm trying to do it so that I'm using the formula. So again, if I ever decide to change this figure, it'll change my cash flow. Yeah, But you could just as easily say, okay, here's my 2,000, my salary's 2,000. It's not changing month by month. So there's going to be 2,000, physically 2,000 going out every month, regardless. The pictures are in the way. Okay. Now, my month. Pictures are always getting in the way, aren't they? It's very difficult to know where to put them. Let's put them up there. So I've said my rent's going to be a month in advance. So all I'm going to do here is that month potentially would have been paid out in the month before, July. So I'm talking about all of this lot. As it turns out, they're the same figures. So in this case, it wouldn't matter. But potentially, if you had a 4 weeks in one month and a 5 weeks in the other month, then that figure for your rent could change. Yeah? Does that make sense?
Yeah.
Of course, it's small figures. Again, we're just talking monthly here. So again, I'm going to say August's going to be physically coming out in August. So I'll just copy and paste all those figures here. In fact, I'll do it because insurance is the same. Because insurance is the same, yeah. Now, because I'm talking about my utilities, they're giving me 30 days to pay it. What I've said on here is, in August, I'm expecting my utilities to be £35, but I'm not actually physically going to be paying it until September. That's what that means. Yeah?
Yeah.
So again, well, again, it happens that all of mine are £35 anyway. I should have made those a little bit different, but so that would be the equivalent of moving it a month. And because it's the same, I'm just going to put it in. I'm just actually just going to put it in there because it was probably the same in July. My interest is monthly. Again, my August will be my August, etc., etc. Bring that one in. I've just noticed that I haven't put in my telephone.
And it was just a reminder to people that if you are interested in some Excel training, do pop your name or say, I'm interested in Excel training in the chat, because I think across the groups, we will have enough people to make that useful. And
I'm hoping it's not been too difficult because of the Excel issues. I'm hoping I'm still managing to explain it so that.
Absolutely.
Yeah.
And I think even if people aren't au fait with Excel, and even if they've not set up any kind of financial templates to the point where they can use some of this stuff, it's just helpful to be aware of that these tools can help you. And most people have this stuff, and at first glance it's a bit like, ugh, if you haven't used it before, but it's well worth either getting up to speed with some of it, getting some templates that make sense to you that you can use, or having somebody like Morag or other people we're in touch with who can help you do some of this, because it's worth its weight in gold in terms of planning and thinking and taking stress out of it.
Excel's just so adaptable and you can mess about with it. So basically here, we're talking about everything's going to be paid a month in arrears. So all of my figures here are going to be paid the next month. Because those are the same every month, I'm just going to put them in there. Now, potentially there could have been something that would have been a July in my budget, but comes in August, but I haven't got that on this one. And again, usually your direct stuff, it can be 30 days again, so, or 60 days in this case was what I was going to say. but you can get the concept, I think, of what I'm talking about here as to how you would put it into your cash flow. So let me just do my 60 days on that one. Doesn't matter because it's the same figure. But it would do if it was a different figure. In fact, I think these are all coming out as the same figures over. Okay. So what we now have is these are the physical monies that are going out and the physical monies that we expect to come in based on our budget. Now, it doesn't always, I mean, if you, budgets are done like every year, or some change them 6 monthly or quarterly, depending on how fast things change. So therefore, but even though you don't change your budget, you can change your cash flow and kind of say, okay, well, I now know actually like my telephone's actually gone up to 120 from here or something. Do you know what I mean? And you can just change your cash flow without necessarily messing about with your budget. If your budget was a starting position type of thing. So what we're doing now is we're saying this is the physical money we're going to get in, and this is the physical money that looks like we're going to be spending out. Now, the other thing that might obviously come into these that we didn't actually budget for as such was potentially if you're buying what's called capital expenditure or like minor equipment and stuff. So things like, well, a capital expenditure is if you buy something that you're going to use for a number of years, you wouldn't necessarily put it into your, it wouldn't necessarily come out all in 1 year in your profit and loss, but in your cash flow, you'd still be physically paying it out. So again, you would put those in the relevant months if there was anything like that in there, okay? So we've got a total for outcomes, for outgoings, and we've got a total for ingoings. I've said my physical money that at the beginning of the period, I had £200 in my bank. So I've got, that's it now adjusted. So in my first month, I've got extra income over my expenditure of £38.50, I'm still okay, I'm still okay, I'm still okay, because this is all positives. But so these are basically what I'm saying my bank figure would be at my bank plus cash, if you're using cash, figure would be at the end of each month. Now in this scenario, I've not gone into any negatives, but let's say, for instance, I happen to have a capital expenditure there where I had to buy some office furniture. And it cost me £500. I've gone into a dip. So I need to think, okay, how am I going to fund that extra? Even if it's only the £152.50, how am I going to fund it? But it's giving you that prior warning to think about it, to give you the time to build the income and get it into your business. Yeah. And does that
likewise, Morag, cut some cost elsewhere. You know, there's different sort of routes around it, but of
course there is. Yes, of course. It doesn't have to be just income. It could be that you could cut down on some of your expenditure. Yeah, sorry.
No, it's just giving that, you know, when people think about these things, there's different ways to juggle things around, or go find some cheaper office furniture. It's just, there's always a few different ways to try and work around a problem.
Yeah, sorry. But yeah, so but the point is that it has given you the trigger. It's given you the advance notice that something needs to be done, or you're not going to have money in it, or that you need to organise an overdraft potentially. It just gives you that forearmed is forewarned. Is that what they say?
Definitely. And it gives you the confidence to handle those figures. Like Alice was saying before, if you've not been used to using these sorts of things, or you hadn't realised when you're running a business or you're trialing a project and it snowballs and you have to start planning in a certain way, either to manage your own finances and your own sanity, or to convince a funder that you know how to manage financially, or you know how to plan and spot where things might crop up, then these sorts of things really help manage, help you on both fronts there.
It gives the funders the confidence that you know what you're talking about as well. Can you see the PowerPoint creation again, or can you still
Not
on
yet? No, you might have to come out of this and then pop back into that.
I definitely can't.
So we realised it's quite a lot to think about on a Wednesday afternoon, but we thought, with at this stage in the programme, certainly for many people watching here or watching on a listen again option, getting into the nitty gritty of all of this, either to raise your awareness of the support or to raise your awareness of it's actually the accessible stuff, to be able to use this, it was hopefully really helpful.
Okay, so any questions around that side of it? Have we lost quite a lot of people?
No, they're all still there. Don't panic.
It's just that I have got a little arrow. I have got.
Yeah.
I thought I'd kind of like.
Jill had to leave for a particular reason, but everybody else is still there, so you're good.
Okay. Okay. So the other thing, other than what I've already talked about, the other thing that Nicola asked me to talk about was financial management. So
it's our sort of the homeward stretch. We've got sort of the last.
Yes, this is the last bit.
Oh no, I mean it's hopefully it's good. It's all good stuff, Morag. So we really appreciate you kind of packing these different things in, because the different stages people are at. Some people need more of the, oh, what do I need to consider? Some people need that, oh, how do I think through my cash flow? And others are, as you're going to move on to here, thinking about these.
Yeah, well, as I said, I'm hoping it's not too hard, or not on either side. It's just kind of something to think about now or potentially in the future. Okay, so this was a spreadsheet. This was a presentation I did a little bit before, but I'm going to use it here. So this is my video, as you see. So okay, what is? I haven't opened my. I've done it again. I haven't opened the slideshow. So what is financial management and why does it matter? Anybody got any answers to that? Or will I just continue on?
It's the critical thing.
Well, potentially, yes, it is. You're quite right.
Alongside social purpose within a social enterprise, it's the critical thing.
This is the next thing, but because money is so important to be able to provide what you're hoping to do in the long run. Okay, so hang on. Again, I'm trying to. Oh God. There we go. Okay, so it's talking about planning, organising, controlling your financial activities and the use of the funds. And it's basically talking about using general management principles to be able to kind of control them, the financial resources. That's basically what financial management is. So now where's everything gone? So, no, I'm changing them. I don't want it changed. I just want the pictures moved again, I think. Okay, so the ultimate responsibility for all of this are your trustees and the governors and your board, and which, depending on which legal structure you're set up on. So what they need to be able to do is obviously they need to understand what's happening. They're not involved in the day-to-day stuff. So it's about making sure that you've put in the controls and the reporting, etc., so that they can get these reports and be sure of what the figures they're getting are correct, etc.
And Morag, what I'll say with a lot of startups or with some of the women we work with, you are these people. If you've developed to the point where you've got, you know, a board of some sort, and they're wanting to see how things work within a larger organisation, or you've got to be accountable in a certain way. Absolutely, what Morag's saying is totally right. But at this stage, or certainly for the first 3 to 5 years, you might, you know, you and your 2 or 3 or 3 to 5 or 5 to 10 people who are on your board, should you be developing that, are what Morag's talking about there.
I am, but you still need to think about the fact that you've got the controls, you've got the reports, and the kind of this flow of information, so that everybody knows what's happening with the finances.
Yeah.
Whether you're preparing your own accounts, your own reports, etc., or whether you're outsourcing them, it might be that if there's other people involved in the planning, etc., they also need to know it. So it is about getting all of that available. So yeah, I mean, there's a big bit about the financial controls, making sure that you're protected from fraud and errors. This is going to be a very big, very quick kind of broad sweep. I'm not going into any details on any of those, but basically we all know about the kind of fraud things that can even come in all your emails, and we know about hacking, and we know about, you know, phishing, and we know about, so it's making sure that you've got all of those kind of controls in place, so that nobody gets anywhere near your money, nobody gets your passwords, nobody know, as much as possible. That's why finances are quite restrict. You restrict them to certain people, partly because you don't want every Tom, Dick, and Harry knowing what you're doing, but also it's about taking those controls. Record keeping. We've talked about the budgets. We've talked about cash flow. You know, the cash flow. Even the cash book I mentioned, it's about keeping a record, making sure that you keep all the receipts, your funders letters, all of that. HMRC are moving closer and closer to having everything online. And a lot of the things like the accounting software, etc., do give you the options to try and connect a lot of your documents and actually store your documents with your actual accounting records, etc. But even if you're doing them manually, you need to make sure that you keep everything safe, and you're supposed to keep them for 7 years, 6 years from the past plus your current year. That's kind of like the legal requirements. Okay, so it's all about making sure you've got your record keeping. It's good for your funders, it's good for your board, and it's a legal requirement basically, because you will have to do your taxes at the end of the year and kind of justify it to your funders, etc. Okay, and then what we've been talking about, financial planning, budgets, etc. This is all part of the cycle. And it's about comparing your actuals with your planning and your budgets, so that you know if things are going good or bad. If they're going good, hey, we're all going to celebrate. If they're going bad, you need to make sure that you know about it as soon as possible and make any kind of adjustments relating to it. And then that all eventually, you can do this on a regular basis. Quite often it's monthly or quarterly, depending on the kind of size of organization, etc. And then eventually, so you can be doing reports to these board, you and your other owners, etc., as I say, on a monthly or quarterly basis. And then at the end of the year, you've actually got your statutory figures that you have to put together, whether that's for your tax return, for your corporation tax, company's house, blah, 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 all of that, the legal requirements. So that's really what financial management is about. It's about making sure that everything that you're doing is protected and controlled, and there's processes in place, etc. Reporting everything, keeping all your records in a safe place, 7 years maximum, comparing it with all the budgets, and so that you know what it's going in the direction you're expecting it, etc. And eventually, I mean, all of these kind of reports will come together to be this for your monthly and quarterly, so that all of your owners, trustees, government, etc., board, etc., can know, as I said, where you're going. But at the end of the year, you'll also have your tax returns, your accounts for Companies House, etc. So that's basically, let's see, have I got anything else on this? Oh, I've got a bit of a blurb after it. Why does financial management matter? It's a legal requirement. It's an ethical requirement, especially if it's something like charities. And I would think with yourselves as well, social enterprises, because you're funders, it's public, it's kind of public money you're using. There's that ethical requirement to make sure that you're using it for the proper specific purposes, etc.
Yeah.
There I've said fundraising is easier. We know fundraising is not easier, but it makes the fact that you've got your figures to show that what you're using the money already on. If you've got your budget, you're saying this is what I'm going to use it on, and this is why I've asked for that amount, etc. It's all about giving the confidence to the funders, yourself, the donors, the trustees, all of that kind of thing. That's what the figures are for, and it helps in your fundraising. There you go, and it shows that the organisation's objectives are being met. And that is it.
Fantastic.
You didn't ask me to do anything else, did you?
Thanks, Morag. I'm going to pause our recording there, but lots of useful, insightful stuff there. And thanks, and we'll look forward to a follow-up session at some point in the next few months.